Rubiya KB, Assistant Professor, MES College, Marapalli, and hereon I am going to introduce what is royalty accounts and the major parties involved in this agreement and how to treat it in final accounts and also the difference between rent and royalty. Let's see what is royalty. It refers to the payment that is made to the owner of an asset or property for its usage. Royalty enables another individual who is not the original creator of the property or asset to use the property in exchange for a payment or other terms. The major parties involved in royalty agreement are the lessor and the lessee. Lessor means the owner of the property, whereas lessee means the one who takes a property on lease. He gave his right to another. He is also known as tenant. And the tenant will get the right to use his property, use the lesser property on a stipulated terms. And in case of a lesser, it is, the royalty is an additional income earning from a property which is not in use. And for the case of lessee, the royalty is an expense. And mainly there are three types of royalty: mining royalty, patent royalty, and copyright royalty. Now let's see how to treat it in final accounts. As royalty is a nominal account, it is a revenue expenditure to the lessee or tenant, and it is required to be debited in the books of the party who is paying it and credited in the books of party who is receiving it. So credit in the books of party receiving it and debit in the books of party who is paying it. Okay. Now let's see what are the major difference between rent and royalty. In case of rent, the parties are known as tenant and landlord, and in case of royalty, the parties are known as lessee and the lessor. Rent is payable for the use of tangible asset, whereas royalty is payable for the use of tangible and intangible asset. In case of rent, it is payable on the basis of time, whereas in case of royalty, it is payable on the basis of production or sale. The amount of rent is fixed, whereas it varies. The royalty amount will varies on the basis of either production or sales. In case of rent, there is no clause for minimum rent, whereas in case of royalty, there is a clause to pay minimum rent. Rent is always transferred to profit and loss account, whereas it is transferred to production account or P&L account only. Now let's see what are the technical terms with regard to royalty. First of all is all about minimum rent. This is the minimum guaranteed amount payable by the lessee to the lessor when there is a low production or no production. And that is why the minimum rent is also known as fixed rent or dead rent. Next is short workings. The excess of minimum rent over actual royalty is known as short working. When the actual royalty has not reached the level of minimum rent, then the deficiency is called short working by the lessee and the same is called royalty suspense by the lessor. Now let's see what is recoupment of short working. The right to recover the short working of the previous year from surplus royalties of the subsequent year as per the royalty agreement is known as recoupment of short working. Mainly the recoupments are of two types, that is restricted right of recoupment and unrestricted right of recoupment. And that's all for the day. Thank you.